Hey, thanks for joining me. In today's video, I want to share with you the top 4 benefits to trading weekly options. Now, a lot of the things that I do is actually working with people one-on-one in trading and coaching and working with them. So if you're interested in that, take a look at the tradersfly.com website. Just go to tradersfly.com. You can go to coaching. You can see there's single one-on-one coaching sessions where you could just buy one session, or you could do like something with 3 months or even 6 months length of time, depending on what you're looking for. Now, we do have a weeklies course coming out soon, August 18th. You could get it on a promo, and all of the trade strategies that are kind of in here, I share with my coaching group that are into trading weeklies. And we trade weeklies quite often, and there's a few reasons behind that. So some of those reasons include that you get better faster. Okay. When you trade more frequently, you just get better faster. You get faster time decay. There's less Vega issues, and it's much more simple. There's less adjustments and less problems. So let me share with you a little more insight on each one of these. If you want to just get a big insight, there you go. But if you want to get a little deeper, let me share with you some more thoughts about these reasons. So the first thing is you get better faster. So when I work with people and I deal with them kind of one-on-one, we go in and we do some simulated trades, and I have them put on some sample trades. So we go in and we put on a ton of positions. So this isn't just my positions, that we put on their positions in their account, and we get them to practice things, because by simulating you build habits. So they put on a bunch of positions and they get to practice that. Just like if you're looking to make brownies, make a pizza, you get to continue to practice time and time again. And by doing that and repeating it, you get to learn faster, right? If you put on a 30-day trade, it takes you like 30 days to figure things out or to see if it worked or it didn't. When you put on a weekly trade, you might be doing something in a shorter duration. So let's say you put on something in 10 days, you get to see that result within maybe 5 or 6 days. If you put on a 40-day trade, maybe in 20 days, you see a result of some sort, whether it's a win or a loss. So by doing weeklies, you get to learn faster and be better faster. Okay. You also get faster time decay. So when I deal with a weekly, like let's just take a look at Amazon over here. If I put on a weekly trade that's let's just do a butterfly that's 8 days. So we'll go in and we'll do kind of like let's do an iron condor, because iron condor is just pretty universal, and we'll try to make it kind of even so that way it'll overlap for the other durations. Okay. So here we're doing an iron condor. It's fairly wide. Okay. So when you look at this iron condor, let's go in and float. There we go. So it's fairly wide, but if you look at the theta decay and time decay, you're basically decaying about $8 every single day. Okay. Now you're not making a ton right now because it's a weekly, so you don't make as much with the premium. But let's go to 20 contracts just so we can take a look at it. Now our theta decay with 20 contracts, 163 theta. Let's do the same trade. Let's analyze the same trade, but let's switch the expiration from about August 26th is 8 days. So let's switch from an 8-day, because you're probably watching this sometime in the future, to maybe September 30th. Okay. So now look at this theta. So now my theta or time decay is 47. Okay. So look at that difference. So I can either make $47 a day or go into the weekly $163 a day. So $163 sounds better. Now you do incur a price risk when doing that, right? There's some price risks by going to a shorter duration, whereas this line is much smoother. This line over here is much more aggressive. So if the price moves on you, man, you're in trouble much quicker. But the point is that by doing shorter duration, you can, kind of accelerate things. It's like adding a little bit of rocket fuel to your car, or or adding a little bit of extra spice to your burger, or Worcestershire sauce. So you're going in and you're really just spicing things up a little bit more. So it allows you to make more money quicker, but you do get a price risk that's associated with that. Okay, the other thing is less Vega issues. So when you do weeklies, if you're worried about Vega or you don't understand Vega, you get less Vega issues with weeklies. So when you go in with a longer term date, like this September 30th, so September 30th, we've got 43 days. So on a 43-day trade, my theta is 47, my Vega is 121. So that's almost like a 3 to 5 times let's say about what, 4 times 4 times 5, maybe about 2.5 actually. So it's about 2.5 times bigger, right? So that's about a 50, that's about 120. So about 2.5 times bigger. So my Vega is a bit of a problem. It's a much bigger Greek. And in fact, it's the biggest Greek here. Whereas when you look at the weekly here, the 8-day, my theta is a lot smaller from an absolute value, right? My theta is actually twice the size of my Vega. So if I have a Vega problem, my theta in 1 or 2 days will, eliminate it. It'll knock it out. It's much stronger. So in there, that's why you don't have the Vega problem, because your theta is so much stronger because of that faster time decay. And the other thing is there's much more simple. Weeklies are much more simple because there's a lot less adjustments that you can do with weeklies. So if you're kind of confused about adjusting and you're kind of wondering like, hey, I don't really get this adjustment thing. I don't know what to do when things go against me. With weeklies, you actually don't have to deal with adjustments because there's not a lot of time premium involved. So you really don't have room to adjust. When you're doing an 8-day trade, you could maybe do one adjustment at most or tweak a position lightly, but you can't do too much. So what you do is you put the position on, and if it's working, great, you take it off. If it's not working, well, you take it off. There's not a lot of room for adjusting. Maybe one time, but there's not a lot of complex positions. When you go into longer duration trades, those longer duration trades, you might start out with something like a iron condor, and then what you do is you might add another vertical on top. Then you might say, oh, okay, well, I need to also add another diagonal there. So it starts adding more and more positions there, and that can make the position much more complicated. And you don't really have to deal with that when you're trading weeklies because you just don't have the room or the time because the premium's not there. So anyway, so if you want to keep your position simple, less adjustments, weeklies are another great starting point. So anyway, I hope that helps, opens your mind and eyes up a little bit more to trading weeklies. If you want to work with me one-on-one, definitely check out the website, tradersfly.com. But if you just want to go grab the course, there is a discount and promo, so check it out. For now, there's a little bit of a discount, about $100 worth, and you can check all the details on the website. Just go here, click the link, and it'll take you right there. No coupon necessary. Just click it through up until September 25th, and you should be good to go. So you can see all the modules in here. There's a ton going on, and we'll probably add some more with time. Right now, this course is 20 hours long with 55 modules. And if you don't trade calendars yet, you could save it for maybe in 6 months. You might be interested in calendars, or you might learn something from calendars to benefit your iron condors or butterfly trades or vertical trades. So you might start learning a little bit more about how things work and operate. So I hope that helps. Truly appreciate you joining me in this video. If you're interested in the course, click the link down below, or if you really want to work together one-on-one for 3 months, 6 months at a time, then reach out, and it's also on the website. All the details are there. We can chat about it and go from there. Thanks, and I'll see you next time.